Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Mahima Vashajani, and we will take you through the next 1 hour of trade. This show gets you answers to all of your stock-related questions, and to that end, you can send us a message on the number on the top of the screen, or you can call us on the landline number on the bottom of the screen. Today, I can promise you with a certain degree of confidence that we won't have any interruptions, so we're set to take your questions through the next 1 hour. But before we start on that, let's take you through what's happening with the markets. And we've seen a recovery from the bottom of the trading session so far. We are treading in positive territory, very narrow gains, and the question is whether or not we will sustain, because at this juncture there are more losers than gainers on the Nifty 50. In fact, pull up that heat map for the Nifty 50 and you'll see exactly what I am talking about. At this point, you have just about a quarter of the screen, or close to half of the screen that is gaining, but more losers than gainers at this point. You have the likes of Mahindra and Mahindra as well as HDFC Bank and BEL that are lending some strength. At the bottom of the screen, you have Coal India as well as Adani Ports and a couple of other stocks, SBI Life, HDFC Life, all stocks that have gained quite considerably in the recent past, cooling off just a tad bit. The broader markets continue to look more positive. In fact, you have the mid-cap index that's trading with gains of about 0.2%. And the small cap index is up about 0.5% as we speak. And let's pull up the overall market breadth just to give you some perspective and color as to how we are faring so far in the session. And there are, in fact, more gainers than losers. Not too much in the way of news flow, but still, let's take a look at a few individual counters that might be in focus today. Mahima?
Right, so Yes Bank is one of them. It's almost down 8.7% as we speak. There's Aptus Value, where there's a block deal, is down by about 7.5%. There's Reliance Power, Reliance Infra, both down by about 4%. HG Infra, Avanti Feeds. Avanti Feeds has been seeing profit booking since quite some time now. Post the UK FTA, it did see a significant uptick, but now it's down by about 3% today. So Suzlon is seeing some profit booking down by about 3%. AstraZeneca, Cyient are some counters that are languishing in trade today. Some counters that are doing well though, there are counters like RCF, which is up about 7% in trade. There's Pact, which is up almost 10.7%. Deepak Fertilizer, 6.8%. There's Lloyds Metals, Indian Metal, J Kumar Infra, all gaining by about 5%. So all of these counters buzzing in trade today. With that, let's also welcome in our guest for the day, Swati Hodkar, AVP Technical Research at Nirmal Bang, and G. Chokalingam, founder and MD of Economics Research, joining us. Welcome to both of you and a very good morning to you. I'll start with the first question, which is from Hari, who is writing in from Hyderabad. He's holding 200 odd shares of EMS Limited at the rate of 765, and he's sitting on a loss of 36,000 odd rupees, and wants to know as to what should be his next course of action. Swati, I'll come to you on this one. A very good morning to you. What are the charts indicating for EMS Limited?
Good morning to all of you. Definitely my view is a little bit cautious on this particular counter, because from the start of 2025, we are continuously witnessing a selling pressure, and also the fact that it is trading below the averages also. Now, it has a cluster supports nearby 560 levels. If it's break that level, then more selling pressures can be seen into the particular stock, which might take a counter towards to 520 to 530 levels. But since it's trading nearby the support level, I will suggest to hold on your long positions with the mentioned stop losses. If you're getting any upside rally towards at least 600 to 620 levels, I should suggest to exit your long positions on every rise. So the view is a little bit cautious on this particular stock.
Okay, the view is cautious, so exit on rise is a strategy on EMS Limited. The stock is down as much as 32% over the past 6 months or so, and quite a bit of that over the course of the last 5 months or thereabouts. Dheeraj is calling us from Hyderabad, the first caller of the day, looking to invest as much as 2.5 lakh in Coforge as well as NTPC. Morning, Dheeraj. What's the thesis here? Why these two stocks?
Actually, NTPC have corrected a lot since its long time high, and it is consolidating since so long, sir. And Coforge, there is a stock split. Today is the last day to buy Coforge stock for the stock split. So I have picked these two stocks. Is it the right thing, or should I look for other opportunities? Is my query, sir. I would like to know this from Mr. Chokalingam, sir.
Got it. So my only query is that you've said that your outlook is short term. How do you define that?
Sir, for the next 3 months.
Okay. So generally, Mr. Chokalingam does not give you such short-term views, but I'm still going to ask him. Mr. Chokalingam, as always, a pleasure having you on the show. And good morning to you as well, Swati. What's the view on these two counters, 2.5 lakhs in Coforge as well as NTPC? You don't need to stick to them. You can suggest something else as well.
Yeah, short term or long term, I prefer Cyient to Coforge. Coforge is a quality stock, but it has already played out in the short term itself in a very big way. So therefore, ideally speaking, Cyient is a better bet even for short term. NTPC, after the correction, it's a quite decent stock to consider for long term, even for medium to long term. It's a good buy at the current level.
Just a quick follow-up, Mr. Chokalingam, just purely on strategy, because a lot of people end up doing exactly what was being suggested, which is to buy on the record date or just before or ahead of a corporate action, something like a bonus or a dividend or a split in this case. Is that something that makes a lot of difference?
Not at all. Not at all. There is a wise man story: to cut it short, the market discount the future. So you shouldn't be too late to buy, for corporate benefits. You should visualize them happening and then buy. That should be a wise strategy to create a lot of wealth over a longer period.
Well said, Mr. Chokalingam. All right, the next question is on Tata Technologies. Suresh Kumar from Coimbatore has around 700 odd shares bought at 955 a piece. He bought this in January is what he's saying. He's sitting on a loss of around 1.3 lakh rupees right now and wants to know as to till what time should he wait for these to maybe turn positive or profitable. Mr. Chokalingam, I'll again come to you on this one. Should he book his losses or should he continue to hold?
Fundamentally, it's a sell, and I would buy Cyient again, because I don't hold Cyient personally, directly or indirectly, but I am quite impressed by relative valuation. Tata Technology, in my view, is a great company, quality management, no doubt. But is it a good valuation? Certainly not. For the kind of year-on-year profit growth, it doesn't deserve this kind of valuation. So therefore, according to me, Cyient is a better bet than Tata Technology.
Okay, so that's with regards to where Tata Technology stands. Our next caller, Tiku, is calling in from Ludhiana. Tiku, a very good morning to you. How can we help you?
Good morning, ma'am. Good morning, sir.
Good morning, Tiku.
Go ahead with the
yes.
go ahead.
My query is, I have purchased IRCTC almost 3 to 4 months back at a rate of 804 250 shares.
Okay.
I am a long-term investor, but I am not seeing any movement last some 3-4 months.
Right.
I am unable to decide whether I should hold it, sell it, and buy something else. Please guide me.
Okay, got your point. I'll take this up with Mr. Chokalingam. Mr. Chokalingam, do you think IRCTC is a good counter to continue to hold, or do you think he should sell and invest in some other counter? In terms of numbers, it was a good quarter and a decent quarter for IRCTC in Q4.
Yeah. So, it has reported a consolidated price of around 16 rupee EPS, and at 765, slightly stretched, but certainly, the correction of nearly 30% from the 52-week high makes it a little attractive for medium to long-term investment. So therefore, I would hold a view of hold in case it declines even 5%, then one can accumulate quite aggressively.
Okay, so that's the view on RCTC. It's done reasonably well over the course of the last 3 months, up about 13%, relatively speaking. It's done well. Sunena has got the next question, and I want to go across to you, Swati, on this one. The entire banking back in focus, of course, but this one specifically on Indian Bank, and she's got a short-term view on it. She's wondering whether to enter at the current juncture for a short-term target, and where would you place that target? What, according to you, should be the stop loss? The stock is doing reasonably well, the second highest gainer in the PSU banking pack today.
Yes, Alex, really, all the PSU banks are really doing very well from the last few trading sessions of, say, the week. This particular stock is now almost up by 7% on monthly basis within a span of a one weekend. So I believe the current levels are the elevated levels because it's trading at all-time high levels. If you're getting any dips towards to between 625 to 620 levels, those are the very attractive levels because the risk-reward ratio will be a favorable on every dips toward to 625. Counter is really positive. I will suggest not to buy at the current market price. Let the stock correct down a little bit on a downside. And because from the past history, 3 to 4 months, we are witnessing that the stock always come down to touch the 20 days moving average. And again, it's heading towards on the higher degree as such. So if you're getting any dips towards to 625, definitely you can go for a long position, but not at the current market price. I'm looking for a target of 700 to 720 levels on the high side.
Okay, 700, 720, but don't deploy at this stage. Watch for further upside on Indian Bank. The stock and, in fact, the entire pack of PSU banks has been in focus. In fact, where's the index at this point? It's up 56 points or thereabouts. Not very big move, but yesterday's move was quite substantial. So watch out for whether or not that momentum takes it through the rest of the trading week. BSE is the counter that I'd like to talk about next, and I want to come to you, Mr. Chokalingam, because this is a question from Ganesh from Bengaluru. He's bought at levels of 2650, so he's currently in the green. Now, this is a counter that is expected, or a company that is expected at this point, FY26 consensus estimates, if I remember correctly, top line growth of more than 15%, bottom line growth of more than 20%. The only question is, are the valuations justified at this point? Because it played catch up to quite an extent, and there are question marks about that expiry day and whether or not it shifts from Tuesday to Thursday and the implications there. So would you continue to hold, and what is the potential upside?
No, it's very difficult for me to give a recommendation of buy or hold. Believe me, I had recommended the stock at around 65 rupees, not in distant past, just about 3-4 years back, before 2 bonuses. So that time, there was no taker, NMAS was not buying. Even if you adjust for the cash, it was trading at 15 PE. Now it is above 80 PE. Certainly, I'm not in a position to give any buy recommendation or hold recommendation at current valuation.
Okay, so that's with regards to where BSE stands. Our next caller, Anindya, is calling in from Chennai. Anindya, a very good morning to you. How can we help you?
Hi, very good morning. I'm from Chennai and I'm holding SBI cards, 68 quantity I'm having presently, and it was allotted while it was listed, and little bit of addition and later on I have done. So that is the current condition. So I wish to understand, should I hold it? I can hold it for a period of next 2 years.
Next 2 years. All right. I got your question. I'll take this up with Mr. Chokalingam. Mr. Chokalingam, do you like something like an SBI cards? And from a next 2 years perspective, would you recommend to hold?
No, I think one can sell it because ever since it got listed, it has been struggling in showing a consistent profit growth. So I would be more optimistic on SBI, State Bank of India, rather than SBI cards. I am pretty confident that SBI Bank can consistently post double-digit growth in profit for next 2-3 years. That would be a more dependable stock in the large cap space than the SBI card. Of course, you would be playing indirectly on SBI card as well by holding SBI. So that way, the risk of selling SBI card and buying SBI is also mitigated to some extent.
Okay, all right, so SBI over SBI cards is the view. Since we didn't get a view on BSE on the fundamentals, let me quickly go across to you, Swati, on the charts. 2650, if I remember correctly, is the buy price. What are the key levels to watch out for?
Yes, Alex, the view is definitely positive. The counter is really doing very well and continuously making the new all-time high. I will suggest to hold on this particular stock upside. I am looking for a target of 2800 to 2840 levels. If you want any kind of a stop losses, profit stop loss, 2690 is the immediate cluster support level. So by keeping that as a profit stop loss, you can definitely hold on your long positions. For immediate target will be a 2800 and beyond that 2840 levels can be seen.
Okay, So that's the view with regards to where charts are concerned for BSE. Our next question is from Chanukya, who's writing in from Hyderabad. His query is on Ion Exchange. He's bought 2,000 odd shares, bought at 660 a piece, and holding since the past 3 odd months, and wants to know if he can continue to hold for another few months or not. The target to reach is around 750 odd rupees. What's the view like, Swati?
View as of now, it's sideways momentums we are continuously witnessing from the last few weeks. As of now, the stock is under the consolidation phase within the range of 500 to 600. If it manages to give the breakout of that level, definitely upside rally can be seen towards to 670 levels. So if you're looking for a long-term horizon or basically more than 6 months at least, so you can definitely hold on your long positions. Downside, it has a very good support of 500 rupees. So as long as it trades about that level, positive momentum can be seen in the near-term future. So it's a hold from my end.
A hold, all right, on Ion Exchange. EIH Hotels is what we're talking about next, and Rohit is writing in from Muscat in Oman and asking about this. Can it be bought for the long term is a question. Mr. Chokalingam, on the fundamentals, would you buy the stock?
For long term, maybe yes. In the short to medium term, I doubt whether it can create any significant wealth, because valuation is, even after the steep correction, it is slightly stretched. But medium to long term one can consider, because if you look at the shareholding pattern, two large players, including Industrial House, they are having a considerable stake in EIH Hotel. So therefore, in the long term, there is a possibility of re-rating of valuation multiple for EIH, and also a few expansions are happening, and that should also contribute, beyond 1 to 2 years. So therefore, yes, buy for long term, but short term, it is unlikely to create any significant return. That's my view.
All right, so that's with regards to where EIH Hotel stands. Our next caller, Shankar, is calling in from Chennai. Shankar, a very good morning to you. I believe you have a query on ELGI Equipments.
Okay, yes, very good morning. I want to know about the ELGI Equipments fundamental.
Right.
I am ready to wait 3 to 7 years.
Okay.
I am very glad if Mr. Chokalingam will deliver about that company. I am quite happy.
Sure. I'll take your query up with Mr. Chokalingam. Mr. Chokalingam, what's your view like where ELGI Equipment is concerned?
After the steep correction, also the valuation company is not there, but it, of course, it's a great company, excellent track record. And it also, as a track record, commanding very high valuation multiple on the market. So considering that, yes, hold and accumulate on every decline purely for long-term investment.
Okay, so that's a view from Mr. Chokalingam on ELGI Equipment. Let's talk about Gujarat Pipavav, and this is a stock that reacted positively to its Q4 earnings. It's something that Sushila from Bellary has bought at levels of 159, which is very close to the current market price, and she's looking for targets and whether to exit at this point or to hold. She's not making a profit at this point. Is that likely on the chart, Swati?
Chart as of now, Alex, we have already seen a very strong momentum in this particular stock from almost 130 to 165 levels. I believe that we might witness some sort of a profit bookings at the higher levels, and which might drag a counter back towards to 145 to 150 levels. So my view is little bit cautious at the current market price. I will suggest to maintain the strict stop loss of a 153 on a downside, so that your loss will be very limited. Positive momentum can be seen only the stock manages to give the breakout of a 160. From the last 2 days, we are witnessing that it's making an intraday high, but unable to maintain a very positive closing above the 160 levels, which is the little bit cautious and on the technical front. So hold the counter by keeping a strict stop loss of a 153. If it's managed to give the breakout of a 160, 170, 172 levels can be seen.
Okay, and we've got our next caller. हमारे साथ जुड़ रहे हैं श्रीनगर से बबलू, नमस्कार. How can we help you today?
Good morning, sir.
Good morning.
Sir, I have purchased Marine Electrical at the rate of 225.
Okay.
225, 700 shares.
Right.
I need to know what is the future.
So please go ahead.
I'm holding short term. Short term.
Okay. So short term, and when you say short term, it's less than 1 year, 3 months, 6 months. How you defined it?
Less than 6 months.
Less than 6 months. Okay. So Swati, on the charts, the stock is up and about in trade today, up as much as 5%. What about the volumes? I have not looked at the stock myself. And what levels would you watch for the upside?
See, on a larger degree, if we look about the monthly charts, the stock is well placed above the important resistance level, or say the Fibonacci retracement level, which comes to 61.8%. 180 levels are the very strong support levels, and it's well placed above that level on a larger degree. So I believe that very soon we are likely to witness some sort of a breakout in the near-term futures. Volumes are very slowly and steadily it's rising up on a higher side, but when the volumes will get increased, definitely we will witness a very strong price momentum upside, the immediate target will be 240, and beyond that level 260 levels can be seen. So I will suggest to hold on your long positions by keeping the strict stop loss of 180 rupees on a downside for a target of 240 to 260 levels.
Hold is the view coming in on marine electricals. Our next question is from Guru, who is writing in from Mysore. He's purchased RVNL 500 shares at 422 a piece and wants to know whether he should sell or hold. He's bought this a week ago, so I believe that was near to when the company announced its results. Mr. Chokalingam, I'll come to you on this one. In terms of guidance, they missed both their Q4 FY guidance as well as their FY25 guidance. The numbers also were not very impressive. Revenue hardly saw an uptick of around 6 odd %. What's the view like? Should the person continue to hold or sell at this moment?
Yeah, you are absolutely right. Valuation comfort is not there even after the significant correction. So definitely it's most unlikely to give any significant return in the short to medium term on the fundamental ground. So therefore, I would maintain a sell on every small rise also in the stock price.
That's the view with regards to where RVNL stands. Our next caller, Man Singh, is calling in from Andhra Pradesh. A very good morning to you. How can we help you?
Yes, madam. Good morning.
Yeah, good morning.
I'm holding KS Network 500, 200 shares, madam. Average price 950 rupees.
Right.
I want to know the fundamental analysis, madam, and technical level. Where should I accumulate more on the average?
Okay. Okay, I got your query. I'll take this up with Swati. Swati, do you think this is the right time to average out Tejas Networks?
I will suggest not to average out at the current level because the stock is not showing any kind of a reversals from the lower level. Let the stock correct down a little bit more, and I believe that the selling pressure is likely to be extended, which might take a stocks towards to 660 to 650 levels. At those levels, you can definitely again review this particular counter, but my view is cautious, so avoid these long positions at the current market price.
Okay, avoid long positions on Tejas, and the stock is not done too much over the course of the last month, just about 1% higher or so. Castrol is the next counter. It's not a stock that we talk about very often, but it moves quite dramatically, especially when you see a movement in crude oil prices. We've got Raghunand Iyengar, who's asking about this. He's bought at levels of 115. He's looking for a long-term strategy that is around 1 year more. He's bought at levels of 150. Okay, so he's in the green, quite considerably so. Mr. Chokalingam, on the fundamentals, lubricants as a space, not something that a lot of people invest in. What's your opinion?
Yeah, for a long term, I think this is not a great stock because of few structural changes happening in the industry. One, you have a pure play, lubricant play like Castrol, Gulf Oil, which are intensifying the competition and expanding the capacity. And on the other hand, you have oil marketing companies, which are also, quite aggressive these days in lubricant. The third layer of competition is coming from smaller companies like Savita Oil, Tidewater. There are so many companies which have got into lubricant. So on the other hand, the electric vehicle is slowly taking off. So I believe firmly that this kind of business doesn't have a great prospect for the long term. But however, as you also talked about this stock, tactically it keeps moving up and down, and now it has corrected quite a bit. So this is a good stock on a tactical ground for a trading purpose in the short to medium term. So therefore, one can hold it.
Hold it. I take that point. So let me close the loop then. If it's a trading strategy that you're suggesting that you look at the stock for, Swati, on the charts, how would you trade it? If you're sitting on gains, would you book or would you hold for upper levels?
Alex, I will suggest to hold on this particular counter because on the technical front, stock is very well placed on the important moving averages, and also it is running in the CD leg of the harmonic pattern is one of the pattern on the technical charts we do like. I believe that the 235 to 40 are the likely levels can be seen in the near-term futures. So you can hold on your long position since you are into the profit. If you want to give the profit stop loss, 215 is a very good support level. So by keeping that as your profit stop loss, you can definitely hold on your long positions for a target of 240 rupees.
Okay, hopefully that answers your question on Castrol. In any case, if you're planning to hold for just a year or so, it is a tactical play. Murli is calling us from Bengaluru. Hi Murli, and thanks for calling us again. Good morning to you. How can we help you today?
Good morning, Mr. Alex. My thanks to all the panelists, including the co-anchors. My query is to the fundamental Mr. Chokkalingam.
Okay.
I bought HUDCO last August at 1,000 shares at the rate of 280.
Okay.
And I had the management interview very often appearing in your channel.
Yes.
That they are talking about a very 1.5 lakh crore of asset under management for the next few years. And they are slow and steadily they are improving and they have shown good results. What is your view? Should I hold or switch out to some other good counter?
Okay. So first of all, Mr. Murli, I want to appreciate that you're watching management interviews on our channel. In fact, you have a better memory than most of us and you're remembering exact details of what has been spoken about. So first of all, kudos to you. Mr. Chokkalingam, specifically on the outlook fundamentally for HUDCO, would you hold if you bought at levels of 280?
At current price, it is trading at a 2.8 times price to book value, which is quite stretched. So I would give hold, and in case the stock runs up even 5-10%, one can sell it, because on the other hand, you have a attractive banking stock like SBI, Bank of Maharashtra trading at around anywhere from 1.1 to 1.5 times, which give you assured consistent growth. So I would prefer those stocks to HUDCO.
Okay, so I have a specific question on financials, but I will ask that after the break. Murli, do listen to the answer because I think this would relate to you as well. We have to slip into a very quick break, as I mentioned. More on the other side. Do stay tuned.
That's huge. That is a biggie. It's out of there.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial.
Welcome back. Before the break, we spoke about HUDCO. One of our viewers, Murli, called in asking whether it should be held. And in fact, Mr. Chokkalingam, who's our fundamental expert today, suggested that on any rise, you can book out of that and move to a banking counter. Now, Mr. Chokkalingam was speaking a few days ahead of monetary policy review when there's expected to be another rate cut. So that would be the third, potentially another 25 basis points cut. And so therefore, over the course of the last month and a half, the thesis has been that you're likely to see a net interest margin compression for banks because of interest rates going down and the way that these rates are transmitted. And you should consider moving to NBFCs because their cost of funds will go down, and for them, their operating metrics will improve. Is that something that you believe? Or on the other side, if lending rates go down, public sector banks will stand to benefit because the lending velocity or the loan growth will improve?
Very interesting question. I would be very happy to give my view because I was the first banking analyst in the country starting from 1992. what you said is true. When the reversal of interest rate cycle starts, the interest rate will come down and margin pressure will be there. But let me tell you, if you look at the last 3 to 3.5 decades of banking industry trend, that's only a short-term problem because banks are not supposed to do charity. They are supposed to make money out of lending. So ultimately, after 1 or 2 quarters, they keep adjusting, their lending rates in line with, the deposit rates or deposit rates in line with the lending rate. So they come back to normal. Now, this is a time, second reason, this is a time for, to be extremely bullish on the banking stock, particularly on the public sector banks, because there is a second structural change, which is continuously the net NPA has fallen in the last 10 years. We are close to record level of asset quality. And third, the inflation rates are hitting the record low levels. And therefore, the reversal of interest rate cycle would continue. And that would help banks to make more money on treasury operations. Of course, so the gains they make, they are not allowed to put all the gains in the profit and loss account. Some of them they have to take it to book reserves and surplus, but that also would be positive. And also, don't forget the fact that banks are the supplier of financial resources to most of the NBFCs. Almost 1/4, 1/5 of the money comes from the bank only. And lastly, most important, when the interest rate pressure is there, the access to low-cost deposit is very important. And most of the NBFCs do not have that access, and banks have, particularly within the banking sector, public sector banks have a very high exposure to CASA deposit, low-cost deposit. What was considered as a burden, the branch network, now it is realized that having a strong branch network is a big positive because it keeps CASA deposits intact. So considering all that, and also considering the fact that even after the rally, many public sector banks are trading at 1.2 to 1.4 times price to book value. I feel the kind of growth they are expecting is going to be very good. And also considering the normal monsoon, record level of production of food grain. So we are set for a solid reversal of interest rate cycle, which is historically always the banking sector in the medium to long term.
Right. Thank you so much for that comprehensive answer, Mr. Chokalingam. All right. Our next caller, Akash, is calling in from Bengaluru. Akash, a very good morning to you. How can we help you?
Ma'am, I want to know about the Swiggy shares. I bought it at 460, around 470 shares now.
Okay.
Should I hold it or I'm in a loss right now?
Right. I saw that your loss is around 54,000 odd rupees right now. I know, Mr. Chokalingam, you don't like something like a Swiggy. Swati, do you have enough data on the charts to tell Akash whether he can continue to hold or sell at the moment?
You might be on mute,
yeah.
Swati.
I'm really sorry. Yes, we do have a data. As of now, the view is bit positive for a short-term period of time because we have already seen a very strong sell-off from 600 to 3,300 levels on the downside. Now it is under the nearby the oversold zone, so the downside is limited. I will not suggest to book your losses at the current market price. Yes, positive momentum can be seen up to 400 to 420. If that level comes in, then I will suggest to try to exit your long position, but not at the current market price. So you have to be a little bit patient, hold the patience and carry your long positions, not to book the losses at the CME.
All right, the stock is up almost 3% as we speak, and this is also on the back of a Morgan Stanley note today that has initiated coverage on Swiggy with a buy rating and a target price of 405. What they're saying is that they've improved in terms of execution for food delivery. They're expanding their quick commerce market as well and making aggressive investments. Marketing in terms of pricing is steep right now in terms of investments as well. And what they're saying is that it's a duopoly, and improved execution by Swiggy will have an overall impact on Eternal as well, that is your Zomato. And the margin gap will narrow going ahead between Zomato and Swiggy. They're also saying that they expect QC contribution margin break-even in the next 6 quarters, that is by second half of 2029, and they are also revising their quick commerce total addressable market estimates higher to around $57 billion. So that's the view with regards to where Swiggy stands and why the stock is buzzing in trade today, Alex.
Yeah, up 3% and holding near those high points of the day. Now, one of the big talking points globally, and a lot of you will be watching this and have been following it on our channel as well, is a conversation about trade. And this relates to a lot of stocks that could have see an impact because of it. Here's the latest update. US Congressman Rick McCormick has hinted that they will see much reduced tariffs on both India and US sides. And he says that these tariff negotiations are long overdue. Listen in.
I think in the future, I think you'll see much reduced tariffs on both sides. I think when you talk about punitive tariffs, when you talk about reciprocal tariffs, if India's putting tariffs of 13 to 15% in the United States, which is historical, and we're putting 2 to 3, President Trump wants to see that equaled out. If we have to raise ours to 10%, and he can lower his to 10%, there you go, you're at equality. Or if you go 0-0, even better for all the people. That's less government, less taxation, and a cheaper product.
Do you see why sometimes this back and forth with regards to the tariffs, the court rulings, creates some kind of confusion, apprehension? There are a lot of people in India, especially businessmen and investors, wondering what to do. Things perhaps are on hold. We've spoken to a whole bunch of people. What do you have to say to them in order to instill that confidence back into the United States?
Sometimes you have to go through this in order to get to the end. I think this is long overdue. If we would have done our jobs in the past and not allowed this to develop in the first place, we would already solved this problem. You have the largest economy in the world with the United States, over $27 trillion economy. India will be the third largest economy within 5 years. If you look at the future and what we have to do to develop future problems like we have with China, I think it's important to address it now while India is on the upswing rather than wait until it becomes a bigger and bigger problem as we go.
Yeah, okay. So that's the perspective from the US side. Of course, India, it might benefit us to negotiate based on where we head. And we've got a great team negotiating based on what the US President and, in fact, the US Commerce Secretary have said. John Chambers, who's the chairman of the US ISPF, has also talked about India and US soon navigating trade talks. This comes after US Commerce Secretary hinted towards India-US trade deal soon. Here's an exclusive interview with Silicon Valley legend and former Cisco chief executive officer on the trade tensions between the US and India.
We often look what is right for me first and what's right for my partner second. I think on the US-India relationship, we framed this since Prime Minister Modi came into power. The first meeting I had with him, we talked about what could this relationship really mean. And so I think there will be times when we might have disagreements, or some people might say we're looking a little bit more internal than we should be. I think you have to understand what motivates the other side, and usually there's very good logic behind it. And don't let these bumps get in the way of the bigger picture. Are we going to navigate through this? Absolutely yes. And contrary to what everybody is talking about, I believe India will be the first or one of the very first substantive agreements, interim and then longer term trade agreement. Both countries will do very well in this relationship.
All right. Moving on with Ask Profit, our next question is from Satyan, who is asking this question specifically to you, Mr. Chockalingam. He's bought Shelby Hospitals at 230 a piece and wants to know if he should average out or switch to something like an FTC. What's your view here, Mr. Chockalingam?
Yeah, so in fact, we have a research coverage. Personally, also we have bought after the recommendation. There is a little bit of disappointment in the short term. It is posting losses at a consolidated level because they have made a lot of investments in hospital and transplant businesses. So I believe it might take even 2-3 quarters for the company, to turn around this operation very successfully at a consolidated level. So long term looks very rosy. If you look at the enterprise value per bed, it is one of the cheapest, and it is also far below its IPO price of around 248, 249 7 years back. So considering all that, I would continue to give a bold recommendation, but I would caution that in the short term it might continue to disappoint. Yes, FDC is a better bet. It's a that also corrected a lot, and 82% of the business is coming from the domestic pharmaceutical market. I remain very, very optimistic on FDC, even in the short term to long term.
Okay. FTC over Shelby is the view coming in from Mr. Chockalingam. Our next caller, Snigdha, is calling in from Hyderabad. Snigdha, a very good morning to you. How can we help you?
Hi, Snigdha from Hyderabad. So I have 51 shares of Apollo Hospitals at 6960.
Okay.
And they have posted good results. So I just want to know if I should add more good profit or something like that.
Okay, I got your question, Sneha. Mr. Chockalingam, I'll again come to you on this one. We talked about Shelby, we talked about FTC, but what's your view on Apollo Hospitals versus something like Narayana or maybe any other stock in the hospital space?
Yeah, all hospital large players are highly, valued. Definitely, valuations are stretched, but still, I would give a whole recommendation for Apollo Hospital, considering the latest results, which is quite impressive, and also aggressive expansion plans are there. And this company always enjoyed, super rich premium on the market compared to market valuation. So, considering all that, it's a hold. I would give a buy rating in case stock falls at least 5% from the current level.
All right. Incidentally, I do want to point out, Snigdha, and I can't remember who asked the last question on Shelby, Satyan. We have a conversation lined up with an analyst that tracks the space, and we have some details to give you as well. It's an interesting conversation because the thesis is that, as Mr. Chockalingam pointed out, a lot of these hospital companies are going through expansion plans that run through FY26 and FY27. For example, if I remember correctly, Apollo Hospitals stands to add in 5 or 6 locations over 1,000 beds in FY26 itself. And so the question we're asking is this really justified when the occupancy rates are closer to about 65, 67% from the perspective of Apollo Hospitals? And what does this mean for the operating metrics going forward? So watch out for that between 12 and 1. At some point we will play that, or you can catch that on social media later. For now, let's go to the next question, and we've got a question from Richie, who's writing in from Kerala in Kottayam, and he's asking about Cyient DLM. I do know that Mr. Chockalingam, you've got a buy rating on Cyient, and both for the short term as well as the long term, but he's asking about Cyient DLM. He's looking at a corpus of 2 lakh rupees to invest in a period of 3 years. Is this a good price?
I believe at best one can only give a whole rating on Cyient DLM because it is trading at around 50 PE on a trailing basis, which actually captures its valuation fully or a little more than what it deserves. So, as I mentioned earlier, I would prefer Cyient, which is trading at around 21, 22 PE, and it has got majority control in Cyient DLM. Apart from that, Cyient has semiconductor business through 100% subsidiary. So within the IT space, you have a company which is diversified across 3 different technological businesses. So therefore, I prefer Cyient to Cyient DLM. And personally also, we do not own Cyient. So
you made that clarification before, but you have recommended it to your clients. All right, Manjunath is calling us from Bengaluru. Manjunath, hi, good morning. How can we help you today?
Hi. So I want your view on the Reliance Power.
Okay.
Is it a good time to buy?
And what is the perspective that you have on this particular counter? Is it based on the price action that you're planning to buy? Because I see the stock is up about 47% in a month.
Yes, it's on the buy, on the price action, yep.
On the price action. And so if you were to buy today, how long would you be comfortable holding it?
Maybe a year or so.
Okay. So Swati, on the charts, Reliance Power, strong up move over the course of the last 1 month. Is this something that will take it through to higher levels? And should you be wary considering the kind of move that you've seen?
As of now, Alex, the chart looks very attractive on a larger degree. If we look towards the quarterly chart, stock is up by 37%. But also the interesting fact that it has already given the breakout of 2015-16 levels that we was witnessing a very strong resistance levels of 52 levels. And in this quarter, we have seen the breakouts with the very decent volumes. And as of now, it is maintaining a positive closing about the same levels. So on a larger degree, we are witnessing a very strong breakout. I believe it has a potential to reach up to 80 to 90 levels for a short term to medium term level. So it's a definitely hold on from my end. If you want to keep any profit stop losses, 50 is acting as a very crucial support level. So as long as it trades above that level, a positive momentum can be seen into the near term future.
that's with regards to where Reliance Power stands. Our next question is on Adani Ports. Rohit from Bengaluru is holding 1,000 odd shares at 1324 a piece and wants to know if he can continue to hold or sell. His target is around 1560, and he's saying a lot of brokerages are also positive on this counter. Mr. Oaklingam, the monthly business update came in today, and we saw that cargo volumes were up 17% in May. Even the logistic rail volumes were up 13%, and the brokerages that he's talking about is Jeffries, which is maintained by and revised the target price to 1700, which is almost 19% upside from where it was trading yesterday. What's your view like? Should Rohit continue to hold?
Yeah, certainly yes. I believe Adani Port is the best stock within the Adani group, entire group. Purely from economics understanding that the port business will have an excellent future in India, because even if we have a trade deficit in the goods account, we are perennially dependent on larger imports than exports. So both import and export help port business. So even disproportionate growth in the import would be a big positive. And therefore, I'm extremely optimistic on Adani Ports in the medium to long term. So every decline one can buy. And also the second structural change, one can say it, that a lot of bilateral trade agreements are happening. And that is also positive for port business. So then third, India is focusing extremely on manufacturing sector, which is only contributing 17% of GDP. But this government has been giving a lot of thrust on the manufacturing, which would also reflect in the port business. So considering all these structural changes, yes, it's a good buy for long term, even for a medium term.
Okay. All right. So that's the view on Adani Ports. Just a quick reminder, and we do this every time we discuss an Adani stock. It is a part of the Adani group, of course, Adani Ports, and so is NDTV Group, of which NDTV Profit is a part. Tirumurti is calling us from Bengaluru and asking, I believe, about Shakti Pump. Hi, Tirumurti. How can we help you today?
Sir, good morning.
Good morning.
The way the NDTV is anchoring is very excellent, and I'm great fan of Mr. Chokkalingam.
Okay. Thank you so much.
I am great fan of Mr. Chokkalingam, and the way the NDTV Profit is anchoring it's excellent actually, and the kind of knowledge and the intellectual analysis which always Chokkalingam is giving is amazing and excellent. And he is always very much conscious about what the investors should do. If I know the prayer schedule of Mr. Chokkalingam, it would be great rather than wasting much of our time and liking it. My question is, I have 450 shares of Shakti Pumps.
Right.
Whether I can continue to increase or hold it. I am actually, last 10 years I have been buying it, but I have not made any profit of it. After seeing Chokkalingam only, I keep purchasing. There are some situations what he recommends also, it's not been immediately performing, but definitely hats up to him, the kind of wealth and knowledge he has without coloring the emotion to the stock.
That's a very fair point that you're making. In fact, we've got a lot of messages that are saying exactly that. So, Mr. Chokkalingam, hopefully you'll keep coming back to us to give your viewers and our viewers the advice that you've been given. So, Shakti Pump specifically, if you bought at levels of 871, that's his average price, 450 shares he's been buying over a period of time. What is the potential upside from this stage?
Yeah, first of all, thank you very much for kind words of the viewer. And kindness of NDTV Profit also allows such viewer to take a lot of time to appreciate me. Thank you very much. Really humbled. Shakti Pump, yes, it's trading at 33 times now. The only point I want to tell the viewer is that not only him, of general, the small and mid-cap stocks always have extraordinary volatility as a space, and within that individual stock also do have. So never, you buy stock with a mindset of holding for 3 to 10 years, but don't ever hold blindly for 3 to 10 years. And every quarter you keep updating. So when they run up substantially and valuations are stretched, try to book out a profit at least partially. That should be a perennial strategy. But now, after significant correction in Shakti Pump, it trades at 33. Considering the recent growth track record, I would give a hold. So anywhere close to 1,000, this could be a good sell.
That's with regards to where Shakti Pumps stands. Our next question is from Vinod, who's writing in from Chennai. He's holding 1,000 odd shares. 195 odd shares. No, 1,000 odd shares bought at 195 a piece of Inox Wind, and wants to know as to what's the outlook from a shorter term perspective. I'll come to you, Swati, on this one. What are the charts indicating for Inox Wind?
Charts are looking a little bit cautious on the weekly chart axis. We are continuously facing selling pressures on every rise close to 200 levels from the last two trading session. Now it has almost about to test the 20 days moving average, which comes from nearby 180 levels. I believe up to that level we can see some sort of a selling pressure, and then onwards again we can witness some sort of a bounce back rally back towards to 195 to 200. So I will suggest to hold on by keeping the strict stop loss of 179 rupees on a downside. For immediate target will be a 195 to 200 levels.
Okay, so that's with regards to where Inox Wind stands. Our next caller, Ramesh, is calling in from Mumbai. Ramesh, a very good morning to you. I believe you have a query on solar industries.
Yeah, solar regarding. I want to ask for the 3 years view solar industry.
Okay, I got your point, Ramesh. I'll take this up with Mr. Chokalingam. Mr. Chokalingam, what's your outlook like for solar industries?
No, extraordinarily stretched value. It's a great company, but is it a great valuation? In my view, no. But then the retail float is very low. So tactically, it is quite possible to flare up further also. So I would say that net and net, hold in case it rises another 5-10%, it's a good sell, because at the current market cap of 1.51 lakh crore and turnover of around 4,000 crore, even the market cap to sales is exorbitantly overvalued.
Ramesh, are you still on the call?
Yeah, thank you very much. Thank you.
Okay, quick question. When did you buy this?
Regarding about a month back. Not months back, about 15 days back.
15.
I want the view for 3 years. I wanted the view for 3 years.
Yeah, so the point that Mr. Chokalingam is making is that the valuations are very stretched.
Yeah.
So therefore, let me get you a quick view on the charts as well. So if the advice is to book profits, maybe you should consider doing that. Swati, on the charts, it's had a phenomenal up move, and he's made quite a considerable amount of money in just a short period of time, 15 days. Should he book some profits?
Alex, I will suggest to hold on this particular counter. Why so? Because on the daily chart, the stock has given the breakout of the flag pattern, and I believe it has a potential to reach up to 1800 to 19,000 levels on the higher side. So those levels can be seen very soon in a very short period of time. If you want to keep the profit stop loss a downside, 16,100 is the crucial support levels if you look towards the chart pattern. So by keeping that your profit stop loss, you can definitely carry on your long positions. For immediate target will be 19,000 to 20,000 on the high side.
Okay, 19,000 to 20,000 should be your immediate target as per Swati. All right, the next caller, Vivek, is calling in from New Delhi. Vivek, a very good morning to you. How can we help you?
Yeah, hi, good morning. So my query is regarding ACC Cement.
Okay.
And I bought it at a price of 2,500, and I'm holding like 70 shares. And it's been like 6 months that I've been holding it, and I had a long-term perspective, but I haven't seen any movement in the stock per se. So just want to know the expert advice.
Got it. I'll take this up with Swati. Swati, what are the charts indicating for ACC?
My view is a little bit cautious in this particular stock, because from the last 2 weeks or 2 months as such, we are continuously witnessing a selling pressure, and today it has given the breakdown of the 20 DMA as well. If you are looking for a duration of at least 1 and so year, then you can definitely hold on for a long-term purpose. 2,100 will be the immediate target if we get a very positive momentum on high side. Downside, if we want to average it out, I will suggest 1750, 1720 levels are the levels we can be seen in the near-term future. So those are the levels you can take a average out position so that your buying price will come down. So it's a hold from my end for a longer term duration.
Okay, all right. So standard disclaimer again, this is part of the Adani Group, so is NDTV Profit, which is part of the NDTV Group. Our next call is from Chandigarh, and Varun is calling us asking about Eternal. Hi Varun, good morning. How can we help you today?
Hello sir. Sir, I am holding near about 4,000 shares of Eternal, and my average is 192. And from the past 6 months, Eternal is showing range-bound movement from 200 to 240 levels.
Right.
Should I hold it or should I sell it?
Got your question. Swati, on the charts, attractive level that he's bought at, should he book profits is a question.
looks very promising on the daily and the weekly, but since you are earning a very good amount of money as such, I will suggest to book your partial profits at the CMP, because from the last 2 to 3 months, we are continuously witnessing that the stock is not able to give the breakout of a 245 to 246 levels on the closing basis, which is the only cautious point on the technical front. If it manages to give the breakout after that level, 260 levels can be seen very soon. But at the CMP, I will suggest to book your partial profits, and second partial you can hold on by keeping a tight stop loss of 220 rupees on a downside for a target of 260 levels.
Okay, all right, so that's the view on Eternal. It's time now for the rapid fire round. Mr. Chokalingam as well as Swati, this is where we throw as many questions as possible at you. The first question coming through is from Bhaskar from Bengaluru. He's asking about Union Bank of India. Average price is 66. Hold or sell is the question, Mr. Chokalingam.
Hold.
Mr. Chokalingam, next question is from Aniket from Karnataka. He wants to know the best mid-cap or small-cap stock in the real estate space or hotel space.
In real estate indirect play, I would recommend strongly Nesco. Personally, also I hold it.
Okay. Tata Motors at the current price, would you buy or hold or wait rather for a period of 1 to 2 years? Swati?
I will wait to take a long positions. Any momentum towards 2670 to 660, that those level will be the attractive levels.
Okay. RFC is the next counter. Pratha from Kolkata is holding 50 odd shares. What is the long-term outlook, Mr. Chokalingam?
Sell if it rises by 10%. Valuation comfort is not there.
Okay. Sai Life Sciences is the name of the counter. Surendra wants to know. He's bought at levels of 748 and he's wondering whether hold or sell. Swati, on the charts?
Yes, Alex, it's a hold from my end at the current levels. Downside, you can keep a profit stop loss of 700, and upside, you can look for a target of 770 to 800 rupees.
Tata Steel is the next counter. Yuvraj from Chennai has bought 425 shares at 141 a piece. Wants to know whether they should hold or sell. Swati, your view?
I will suggest to hold this particular counter by keeping a stop loss of a 154. Upside momentum can be seen towards to 170.
Okay, Swati, Keynes Tech is the name of the counter. Bought at levels of 6,088. Deepak wants to know, should he hold, average or exit?
I will suggest to hold on this particular counter because as of now it is trading nearby the support level. By keeping a stop loss of 5,800 levels, you can hold on your long position. Any move towards to 6,000, 6,100 can be utilized to exit your longs.
Okay. Coromandel International is the next counter. Bhavesh has 11 shares. Swati, what's the outlook like and target price?
Target price, I'm looking for a 2,400 is the immediate hurdle level. Any move above that level can be seen a positive momentum towards to 2,470. So at the current level, I will suggest to hold on by keeping a today's low, that is 2,290. That will be active as stop loss to carry your long positions.
Okay, all right. On that note, Swati as well as Mr. Chokalingam, thanks so much for joining in, for all the questions that you answered. That brings us to the end of this edition of Ask Profit. It's been a pleasure bringing it to you. Do stay tuned. Up next is Know Your Company.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market mover. Hello and welcome to KYC. I'm Harsh Saita, with me is Puneet Javeri, and today we're going to be talking about Lumax Auto. Why is this one interesting?